A couple of depreciation issues in that for the accounting standards, but not much. Okay. Let's see, took five hand. Oh, wait, on the wrong one. Here we go. Okay. Sufficient appropriate evidence. Auditors must obtain sufficient appropriate evidence to support their opinion. And give me 1 second here. I'm going to clean this up a little bit. So sufficient, that is an amount. Appropriate is a quality. Actually, let me change it for a second. Change that amount to quantity. I think quantity is what they use, is the term they use rather than amount. And this is a quality. So they need to get enough good evidence to support their opinion. Oops. They cannot. What do they do if they can't get enough sufficient appropriate evidence? What kind of report do they give? What audit report do we give if we can't get enough evidence? Anyone? Put it in chat if you want. So we must get enough sufficient appropriate evidence to support the opinion. If we can't get it, what type of audit report do we give? Anyone? Oh, come on. If I have it, I can pull it up. I gotta go to a different. That's not it. I don't know what I did with it. All right, well, I guess if I don't see it, I must. Huh. Must have deleted it or something. Here you go. Here's the audit reports. Which type of opinion do we give? If we can't get enough evidence.
Disclaimer of an opinion.
Yep, very good. Yep, so we give a disclaimer. Yeah, if you can't get enough of the evidence, then you have to give a disclaimer of an opinion, which is really no opinion. Okay, so we actually rank evidence. This is another one you got to be careful about when you do searches for AI. I'll tell you why in a second, but we generally rank evidence based on who creates it and who it's held by. So who made it and who's holding it. And the best evidence is held by a third party. And how do I do this? I don't know. I just realized that I wouldn't. It's held by, created by a third party and held by a third party. Let me give an example. Um, I'm trying to think of one that would actually just come. You have to get this directly from the let's say a invoice from a vendor. You scratch that. I know how I'm going to do it. So this is the best. Medium is held by a. I'll get to examples in a second. And the worst is made by the client and held by the client. Okay, let me give you an example of the third party held by the client. A bank statement. The bank sends a statement to the client. So you get a bank statement at the end of the month, and that is sent to the client. One of the things we always try to do is to move evidence up, to get evidence better. Okay, so we're going to try to move evidence from lower levels up to higher, and that we can do that with the bank statement. Instead of having the bank statement sent directly to the client, we can have a bank statement sent directly to the auditors. Let me do this. Okay, so notice that if the bank statement is sent directly to the auditors, that the client has no chance to alter it. So a bank statement, it could be the best evidence if it's sent directly to the auditors. It could be the medium, the second best, if it's sent to the client. It still is valid. It's just not as good as if it's sent directly to the auditors. And by the way, that's a very common thing to have happen when you get an audit. One of the things that they will say is you have to have your bank statement, your end of the period bank statement sent directly to the auditors. It's a very common thing. The banks expect it, and they'll they'll send it to whoever the client says to send it to. Okay, worst evidence. Um, Created by the client, held by the client. Sales invoice. Client makes the sales invoice, they hold the sales invoice. A sales invoice is the worst evidence. Now, because this is the worst evidence, you might say, well, so we don't want to do that. We don't want to take the sales invoice, right? I mean, you just said it's the worst evidence. However, oftentimes we will combine evidence. I guess we'll do it with this. I wonder if I can make it bigger. No. Okay. So even though the sales invoice is by itself not very useful, it's made by the client, it's held by the client. They can put anything on there they want. Um, you know, it's not very good evidence by itself. However, when it is combined with other things, then it becomes it will add to, it'll corroborate other evidence and become stronger. And let me give you some examples of this. Okay, a sales order created by the client by itself isn't probably very great evidence. Same with the sales invoice. However, it'd probably be on the sales invoice, they'll have the bill of lading. This is a very good piece of evidence. A bill of lading is it's an ancient document, by the way. I mean, yeah, you can go back thousands of years and they'll have something along the lines of a bill of lading. Bill of lading is when you give something to a shipper to have it shipped to somebody. However, the shipper doesn't own it. It's not like you're giving it to a customer and the customer walks out owning it. When you ship something, let's take FedEx. You ship something out FedEx. When you give that box to FedEx, it doesn't mean FedEx owns it. But what FedEx will do is they'll make a bill of lading, and that bill of lading will say basically that we've taken this item, it doesn't belong to us, but we have custody of it, and that we're going to deliver it on the behalf of whoever's shipping it to somebody else. So a bill of lading is really an agreement between, the seller in this case and the shipping company. Now that shipping company is a third party, so you can get a bill of lading from the shipping company, of what they agreed to. Okay, yeah, this is what was put on board of the truck, and that's so that sales invoice would most likely have some kind of a pointer to that bill of lading, and you could tie that bill of lading and go to the shipping company and get an invoice. Now, notice that sales invoice that was pretty much worthless now has led to this idea that the bill of lading, to the bill of lading, and that shows that yeah, it was shipped. And if at least there was an effort to sell this thing, whatever it is, whether it got to the client or not, or their customer, I should say, or not, that's another story. But it was sold, it was shipped. The shipping company took possession of it, whatever it was that they were selling. So even though the sales invoice itself is not very good, what it could lead to is corroboration with other documents. Now, just the bill of lading by itself, if you can't tie it to an invoice, while it's good evidence, it doesn't prove anything because it doesn't prove that there was actually a sale made. It could be somebody shipping something from the company to somewhere else. So, the sales invoice by itself is not very good. And when it's combined, when you combine it with other evidence, then it does become strong and it becomes a corroborating document that, yeah, this actually happened. Okay, so, again, evidence is often combined. Evidence by itself oftentimes is not very good. Whereas if it's combined with other things, it will be much stronger evidence, let's say. Proof of delivery, while proof of delivery is important, it's not nearly as important as the bill of lading for two reasons. First of all, the bill of lading shows that an effort was made to get this stuff to whoever the customer was. Now, it doesn't always happen that way. Somebody gets delivered to the wrong address, it gets destroyed, it falls off the truck, it doesn't, whatever. But it shows that there was an effort made the sale was actually valid, and that the whoever your client is, IBM or whoever, that they actually followed through with it. So that is evidence that it was. Not only that, if it was lost in shipping, there's usually an insurance claim on it. So depending on the insurance claim, it may even be more than what it was, what the sales was for. But regardless, it's oftentimes there's a collection that comes after that anyways, even if it wasn't actually delivered to their customer, they still have a claim on it for insurance usually. Okay. So I want to talk about, yeah, well, let me go back here for a second. I need some space. Get these out. Well, let's go ahead and go through these. Okay, I think we already talked about this. A sales order made by the client, held by the client, probably the worst evidence. Same thing with a sales invoice. Packing list, worst. A vendor invoice. So this is actually for a purchase. Now notice that vendor is someone outside, it's a third party. So what kind of evidence would that be? So a
Is it
vendor,
medium or best?
it is a medium. Yep, because it was made by a third party. It's held by the client. You gotta be a little bit careful, see if they've altered it, obviously. But it's better than the client making it themselves. And again, for some of these, if you want to get them, you can actually move this up too. You could ask the vendor to send the invoice to the auditors. That's kind of unusual. These other two are more common. This is made by um, these are made and held by a third party. So if you get it from the client, it's medium. If you actually contact the shipping company, you can move that up to the best. You can also do that with the invoice. So this would be if you get it from the client. Let's do this for all of these. So a lot of times third party stuff that's created by a third party, you can move it up if it gets sent directly to the auditors. So this would be if it's sent to the auditors, and medium if you get it from the client. But it moves it up. Okay, now I'm going to tell you, I didn't get into it. I didn't put this in for a reason. There are other things that they look at for evidence as far as which for the ranking of evidence. This is where you can run into problems with AI. One of the criteria that someone will talk about would be relevance. And relevance is oftentimes judged by that which is the newest evidence. The newest evidence is more relevant than the oldest evidence, right? Okay, so when it comes to relevance, you got to be careful in that some people think that relevance means that it's the best evidence. The more relevant it is, the better it is. And that's not necessarily the case because there's relevance, but then there's also something called reliability. Relevance and reliability. Relevance means that usually the newest evidence is the best. Okay, so I'm looking up my accounting standards, and there's one that I got from the AICPA that was done last year on the accounting standards. Yeah, I go to a bar and I find a drunk guy, and I ask the drunk guy about it, and he gives me a accounting standard. Which one's more relevant? The drunk guy is newer. You know, the one that came last year from the AICPA is a year old, whereas the drunk guy in the bar is, it's brand new. It's not reliable. That's the problem. AICPA, very reliable. In fact, as reliable as you can get. The drunk guy in the bar, probably not so much. So, you gotta be very careful about when they do these rankings. So if you sometimes they'll say, oh, this evidence is more relevant. For instance, a sales invoice. I mean, well, that's very relevant. It's if you have a sales invoice that, from so for instance, if you had a sales invoice from you know, December 28th, they say, okay, that's very relevant. Doesn't mean it's reliable though. You have to back it up with those other documents, the shipping documents and all that kind of stuff, or else it's not, it's not very good evidence because the reliability isn't there. So even though it is relevant, it's not reliable. So when it comes to grading, evidence, you have to be very careful. If someone focuses on relevance or reliability, that doesn't necessarily mean that's the best evidence. And oftentimes, evidence, the more accurate evidence is the oldest. For instance, you buy a piece of equipment, you don't know how long it's going to last, right? I mean, you make an estimate and you depreciate it over whatever 5 years. It might last 6 years, it might last 3 years, you don't know. Well, 10 years from now, you're going to know exactly how old that machine was. So it's very reliable. You can tell exactly down to the day how long that machine lasted. It's just not relevant. It's too old. You have to have both relevance and reliability. Okay, and sometimes, as you're doing a search, if they're talking about relevance or reliability, you got to have both of those. Okay, let's go. Lawyer's letters. So, lawyer letters. Let me see. I'm going to do something here. The auditors will ask their client, let's just say IBM, just for kicks. If there are any significant legal matters that need to be disclosed, in the financial statements. And this will be the primary, what we call the primary source for significant legal matters. You ask your client. The auditors will then obtain a lawyer's letter scratch that, the client's lawyer that will corroborate or refute the client's disclosures. Oops. So this comes from the lawyer to the auditors. It's a very common document, and they're looking at it to see if it'll corroborate or refute what the client has told you. The client's your main source, but the lawyer letter is corroboration or rebuttal or refute to the client's disclosures. This is required. You must get it. And for US standards, you must get it. Oh, this is what a difference between international standards. International standards generally don't require it. And there's a reason for that. So a lawyer letter, you ask the client, are there any legal, anything legal, any lawsuits, any pending lawsuits, or any unasserted lawsuits? Someone, did something happen, your delivery van hit something or somebody or whatever. Are there any legal things, that should be disclosed in the financial statements? Then the lawyer will get involved, and they will send a letter. Now, the lawyer's only going to know about those things that are working on. So if there's an unasserted claim, they probably won't know about it. But whatever it is they're working on, they'll be able to answer what, give you some background of it. And if you ever deal with lawyers, it's going to be, kind of vague, but it'll be, it'll at least show that there is a lawsuit or what the possible outcomes will be. So anyway, this lawyer letter, it's required for US standards. It's generally not required for international standards. Why? What's different about the United States and other countries when it comes to legal stuff? And I'm sure some of you that have come from other countries are, it's kind of eye-opening when you see kind of what goes on in the United States. What's different about the United States than many other countries when it comes to legal stuff, legal liabilities, and all that kind of thing? Anyone? It's actually a very big difference. The United States has massive lawsuits. They're massive. I mean, they're compared to other countries. If someone is injured or even killed doing something, it's for the most part, other countries they have, kind of standards they'll go through and see how much is owed and all this, to the victims and their families and that sort of thing. And it's more like it's almost like accounting. It's almost like a tax law or something like that. That they kind of have these things established for liability. You don't have these $20 million, $30 million lawsuits for someone, slipping in whatever, and you don't really have those things in um, in other countries. So, well, in other countries, getting a lawyer letter probably isn't is important because you have these lawsuits and maybe you get some inkling that some documentation that they have them. You might be able to say, okay, and it looks like the liability is X amount of dollars according to this table that they use and all that kind of stuff. Um, United States, you don't know what it is. It might get thrown out of court. It might be $30 million. So in the United States, the lawsuits are really off the charts when it comes to so many things. And part of that is the United States. There's in other countries they have more recognition of, say, community. That okay, if the city pays out $20 million to this person, that means $20 million of services is coming from other people, right? I mean, $20 million just doesn't appear. So it has to come from someplace, and they have a little bit more of an understanding of that maybe than we generally have here. But the idea is exactly the same. It doesn't really matter how it came about. Generally, the lawsuits in the United States can be very significant, um, and it is one reason why a lot of other countries kind of shy away from investing in the United States because they don't know if they put an assembly plant in the United States that they might be sued for tens, hundreds of millions of dollars for something, whereas building it someplace else, maybe the lawsuits aren't nearly as much. Okay, so lawyer letters, those are required in the United States. You have to get them. Management representation letter. Oops. The last document obtained by the auditors will be a management representation letter signed by the CEO, the Chief Executive Officer. I should probably write that. And the chief oops, the letter Acceptance of all information provided. This is a responsibility. That looks funny. Let me change it a little bit. So, and there's a whole bunch of stuff in there. When you take the CPA exam, they'll show you it's a list of probably like 15 or 20 things usually. That they've given all the information to the auditors and that they've complied with all the regulations at the financial state. They take responsibility for the internal controls. They take responsibility for basically everything in the company for for reporting. Anyway, it's an acceptance of responsibility by the chief executive officer and the chief financial officer. And you might wonder, well, why do they even have that? I mean, okay, so let's say that there's a fraud going on. Well, okay, if they've already done the fraud, I mean, they're already, in for a penny, in for a pound, they're already there. So why are, what good is it going to do to have someone who's, a fraudster signing another fraudulent document? Well, it's there to remind them basically of their responsibility, and it also nails it down and saying, look, we know everything that goes on here. Now, suppose one of them or both of them refuse to sign it. That generally indicates that there is something they're not telling you, and that you generally issue a disclaimer because it's unknown. You've done your audit, and you probably reached a conclusion one way or another when you hand this to them. It's the last thing you fill out before you get from them. So if they don't sign it, it means that there might be something in there that they are not being truthful about. And maybe you don't know what it is. Maybe you do, but it's a good possibility that you don't. So if either of them refuse to sign it, that usually gets them a disclaimer of an opinion. So refusals, oops. Hey, look at that new language I've came up with. All kinds of stuff in there. Oops. And the reason I say refusal to sign will usually result in disclaimer of opinion. If they were overseeing it, it will definitely be a disclaimer of opinion. How might how might it not be signed if, say, one of them dies? And they didn't want to do it. Yeah, let's go ahead and take a break. The external confirmation will take a while. So let's say be back at, what time is it? 7:05. Okay. Okay, I think we let's finish up the evidence. We're not going to finish this today. Let's jump into uh the last of the actually not the last, the second to the last of the the sampling overview. Okay, so do me a favor and jump into the other handout. So sampling overview and tested controls. And the sampling, this handout, you say, well, what's different about this handout than the other two? And it has to do with most about the test controls, but there's also a few other things to sampling that can come about. And so it's a little bit of a mop up, tested controls plus a mop up. I used to just call this tested controls, but it's a little bit more involved than that now. Okay, purpose of sampling. Oops, yeah. Hey, first of all, audience take select items from a population. I'm not supposed to say value. Oops. So you take select items from a population and you use that to project the value of the population. We've talked about this to some extent in the other stuff. And you might use it, sometimes it could be useful to be more efficient. It could also be the only way to do it. Um, you know, if you're talking about inventory, auditing, if it's a small shop, you could probably audit all the inventory. However, you can probably audit a third of it and you'll get very accurate, say 99% level of accuracy that you get the population as a whole. It's just the statistically, usually, a small sample oftentimes can give you almost the same as taking the entire thing. There are some populations that you can't do that at all. You could never audit all the inventory for Walmart. It'd be impossible. It's an impossible task. Either there's not enough auditors, there's not enough time, there's not enough everything in the world to count the billions of items that are in Walmart at the end of, December. I think they're in a year and maybe it's January, at the end of January. um, you can't do it. So you have to take a sample. So it could be that it's more efficient. It could also be that you don't have a choice. Same thing if you're talking about like medical stuff, you know, vaccines, things like that, how do you know how much they work on people? Well, it depends. You try it on a few and then say, okay, if it works on these, then it'll probably work on this population, whatever it is. Okay. The best is a random sample. Items are chosen randomly. Items are chosen randomly will usually result in an unbiased estimate of the population as a whole. So, and that's what we're looking for is basically what's the best estimate? And we want it to be unbiased. So random samples are the best as far as picking your sample. Second best, systematic selection. It's systematically selecting items. Let me give you an example first. An example usually explains it better than I can. Example, so a systematic selection is usually how you systematically select it. So to choose the 10th item in the population, every 10th item in the population. So maybe you can still figure out how many items you need and then just take every whatever item you need to match that amount that you need to take for your sample. This is the second best. It usually is unbiased. It is possible that maybe every seventh item has some problem that you might miss if it's repeated like that. I would say it's probably fairly unusual, but it's a possibility. And sometimes these may have a random start. So they may have a random start, say between 0 and 9. So it is possible you get some randomness in there, but you still run into the problem that it's a possibility that every seventh item has a problem or whatever, that you don't catch it. I would say that's probably pretty rare in our circumstance, but it could happen. Haphazard. This is probably the third best or second worst. They probably don't describe that on a CPA exam like that, but that's kind of what it is. So haphazard is well, select items for the sample by I shouldn't say random. I should say there's give me a better word for that. Don't put this in yet. See if there is a synonym for random that haphazard. Oh, I already have that. Arbitrary. The editor will select items for the sample by choosing arbitrary items for the sample. For instance, if you just go up to a um, baseball cabinet. Is that right? No. Oops. The auditor will select items by choosing arbitrary items for the sample. So, kind of like if you went up to a filing cabinet, you didn't really look at it, and you just started pulling out, okay, I need 10 of them out of this one. You just pull those out. So that's haphazard selection. I actually did that one time. I'll tell you about it, but I'm gonna finish up the sample, the other part here. But haphazard is in this. It's not usually used for auditing because, well, first of all, it could be biased, and I'll tell you that I have done it in the past where it was biased. But anyway, the it's also not repeatable. Notice that the random sample, you can go to a random number table. Whoever else comes in, they can take the same random items that you took, right? There's no problem with doing that. So the random number table, if you say, okay, use the first two columns, they'll come in, they'll pick the same random sample. Same thing with the systematic. If you take every 10th item, even if you have a random start, you can say a random start of item number 7. So we'll take 7, 17, 27, whatever. Someone else will come in, they'll pick exactly the same sample. If you're just walking up to a filing cabinet and just grabbing things, someone else comes up and just grabs things, they're probably not going to grab the same things. So it's not repeatable. It's generally not a good one to use for auditing because it's not repeatable. Oops. So this one is second worst, and this one is generally not used. It's not repeatable. Block selection. This is the worst. So a block of items are taken to represent the entire population. Let me give you an example of it. Sales for October are used to project for the year. That would be an example of a block selection. The block is October, and we're going to take October's sales and we're going to say we're going to use that for the entire year. The block selection is for blockheads. That's not from me. That's from my auditing teacher. So blockheads are block selection. Now, the reason being is obvious. October may not be representative of the entire year. Also notice that there's no possibility of finding things that happen in different months. Yeah, you'd find anything that happened in October, but you're not gonna find anything that happened in January or February, blah, blah, blah. And also, a lot of times fraud comes about later in the year. December. Are we gonna meet our sales? No, we're not. Okay, we gotta do something. Hey, let's have a fraud. Okay. That's not gonna get caught either if you're only using October. So it eliminates a lot of those things that you can, at least in the other ones, at least theoretically, everything can be picked. Even in the haphazard, it's possible if everything is in that filing cabinet and you're pulling them out, it's very possible that, that any of them could be picked. That's not true in block sampling. Block sampling, only those things in that block are going to get picked. Anything outside of that is not going to. Okay, so, it's not a very good way of doing it. Okay, haphazard. Yeah, I got kind of two auditor stories for this. Is one has to do with internal auditing, and the second one is well, they're both internal auditing, but one is one's good and one's not. Haphazard selection. When I would go do auditing, internal auditing, you're trying to find things that are a problem to fix. Okay, you're trying to make the company better. You're not necessarily trying to see if the financial statements are fairly presented. It's a different aim. You'll do some of that. You'll do some of that, especially if you're working with the external auditors, which I actually did a lot. You'll have some of that, that we're trying to see if the financial statements are fairly presented. But there's also another side of internal audit, and that is you're trying to make improvements for the company. You're trying to find things that are a problem and you can correct them. So I would go to filing cabinets that had a bunch of stuff, especially like contracts and things like that. And I'd go looking through and I would look through the ones that had all kinds of stuff stapled to them, sticky notes, all that kind of stuff. Those are the ones you're going to find problems with. And you did. I mean, almost all of those you'd find problems with them. If everything works out, they're very thin. Yeah, we ordered this, it came in, and everything's fine. It goes in there and it's 4 pages. Things that are a problem, they have 40 pages and they have things stapled to them and they have other, it says see other folder and blah, 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 so those are the things that I would look at. And I would look at those to try to help make improvements. Okay, why did this happen? Was it something we did? Was it a vendor or a customer or whatever it was? So even though it was technically me going and picking stuff out, I was actually searching for things that there might be a problem for, which is not what you're doing generally for sampling. It's more like just searching for problems. I also had a very strange circumstance in that I was at US Steel and I was looking at the sales of of steel. And anyway, there's all these different areas of steel. There's primary, there's secondary, there's automotive, there's all this other stuff, and there's all different customers. And one of the things that they have is, selling steel itself isn't very profitable. It's a commodity. You can get it, there's a lot of places making steel. A lot of foreign countries making steel. A lot of US companies are making steel. And that means that you don't make too much money doing that. However, if you can take the steel and form it into something that somebody wants, you make a part for a customer, here we can do those for you. We have these laser cutters and all this kind of stuff, and we can actually take the steel and instead of just selling you the steel and then you have to make these parts, we'll make these parts for you. And you get a lot more money making parts and things like that, than you do just selling a bulk of, 40,000 pounds of steel. So we would do that, but those invoices were very complex. And those invoices were very complex because you'd have selling the steel, but also the machining, you'd have scrap, you'd have all this other stuff that went on with doing that you'd have in a normal, operation, you'd have producing things. So those invoices were very complex, and you had to go to contracts and see what the pricing was on these, and how much time was put into them, and blah 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 blah. All right, so I'm doing this audit of the sales, and at U.S. Steel, there's these huge buildings on site, and they're huge because they used to have literally 200 or 300 clerks in a room doing invoices, and it would be like the size of a football field, and they'd have them all doing these invoices all day long, and that was how they billed for things. This is before computers and electronic sending stuff and all that, all done by paper, all paper. Anyway, so we had these giant buildings, but now modern times, instead of having 200 or 300 people in the room, you have 10. So you have these giant buildings. I mean, if you wanted space at US Steel, wherever you wanted to, you could easily get it. Yeah, the most room you literally play football in some of these places. So anyway, so I'm in there, and they have all the sales are at this one end of the building, pretty much. Okay, so I'm going through, and then these are all working out. There's a couple little things, nothing crazy. It's all most of it's done computerized by that point, obviously, and they're all done by contracts, and you can all look them all up and tie them together. Very little problem with any of that. So I get to these more complex contracts. They go, oh, well, you got to go see so and so. Actually, I do know who it was, but they say you got to go see, she's down it's at the other end of the building. So I'm walking down this hallway, and this hallway, like, I don't know how long it was, but it was really long. You're walking down the hallway, and I can hear people talking. As I go down, as I get closer and closer, I can hear people talking. I come in a room, and it's one woman in the room by herself, and she's talking and laughing, and it's pretty obvious that she's a schizophrenic. And I kind of go and I talk to her a little bit, and she just kind of looks at me. She says a few things. I can't remember what she even said, but it had nothing to do with what I was saying. And anyway, so I said, I introduced myself. I'm trying to, and I have this list of, I think there were like 40 items that I was going to pull. I collected a list of 40 items of things that I wanted to prove out. And these were these complex contracts. And she just kind of looks at me and smiles and does, and I look at her and I go, okay, is there, can where would I look for these? And basically, and there's boxes everywhere. The boxes on her desk, there's boxes on the floor, boxes behind her, there's boxes on these shelves, and they got labels on them, but it's kind of hard to even know what the label. It wasn't like, okay, this is item, this is 500 to 800. This is, whatever, 801 to whatever, none of that. And so after trying to talk to her for probably, I didn't know what to do. I honestly didn't know what to do. And I was just trying to talk to her, and I said, well, look, and I was kind of trying to show it to her, and I was trying to show her this, and she wasn't looking at it. She would just look at me, and it was very, I didn't know what to do. It was very uncomfortable. Kind of like what it is now. You listening to me talking about it. So anyway, so I go back down the hall. I'm like, what's going on? And they said, well, oh, she's a schizophrenic. And they said, she stopped taking her medication about like a year ago, and it's a union thing. We can't make her take her medication. But she stopped taking her medication about a year ago. And, basically she's going to retire in about another year. And so she didn't want to be around us, and we're fine with her being down there by herself, and so she wanted to have that all to herself down there, and we're fine with that. And I'm like, okay, well, okay, wait, here's the thing, I got to get these. I'm looking for these, and he's, well, you got to talk to her. I'm like, well, I can't, so anyway, so I call my boss. My boss is like, what are you talking about? Like, I don't. He said, well, okay, who's the head over there? I tell him the guy. He calls the guy over. And as I'm walking, I remember walking down to the back down to the hall to see if I could figure out any of this stuff. And as coming back, I could hear the guy talking to apparently my supervisor, and the guy's like, "Yep, yep, yep, yeah. I don't know what you're gonna do." so, so anyway, my supervisor, and the guy says, you got to call your, call your supervisor. I call Craig, and Craig's like, okay. He said, how many items do you have to, so I said, okay, I got, it was 40. He said, okay, he said, go find 10 boxes. And I could not make heads or tails out of it. I opened up the boxes. I couldn't make heads or tails, and the numbering system, it looked like it was similar to what I had, but it wasn't really. So anyway, the uh, he said, okay, take 10 boxes, take 4 items out, and use those. Just reach in and grab them haphazardly. So that's what I did. I went in and grabbed them, and the kicker to the whole thing is they were all perfect. They were absolutely done perfectly. And I said that I talked to the supervisor after that. I said, every single one of these is done perfectly. He said, oh yeah. He said, she's super smart. She's like the smartest person here. She's just schizophrenic. She's not taking her meds, but she's super smart. There's no problem with her doing that. So anyway, that was me taking a haphazard um, selection, not because I wanted to, but because we found any other way, and I really don't think there's any problem. Okay, let's go to stratification of a sample. All right, so stratification of a sample. This is this has to do basically, this is for classical sampling, by the way. Your monetary unit sampling, the sample will be picked based on the size of it, and you do by the interval and all that. Well, if you're doing classical sampling, there's a similar thing, and that is that some accounts are more important than others. So we have a partial list of 133 accounts, and here are the first 10. Looking at the first 10 accounts, which of the accounts receivable would be most important to verify? Which one of those accounts which of the accounts listed above would you want to look at? Are they all of equal importance? Anyone? Which of the accounts would be interesting for you? If you have this list of 10, maybe, which ones would you want to look at?
Maybe number 5.
Yeah, I want to look at number 5. It's a pretty big one. And just by itself, it might be material. You might pick some of the other bigger ones too. maybe number two. No, let's take those two for and um, so those are probably the kind of, and if you look at some account like number three, even if the whole thing is wrong, if it should be zero, well, who cares? It's 28 bucks. We're talking about almost $1 million account. It doesn't make any difference whether that one is there or not. So these are not all of the same importance. So generally the bigger ones you want to look at. Here's a funny one. Which one is the most likely to be fraud? Again, we don't know exactly which one would be more likely, but which one would probably be more likely to be fraud? Which one is a little odd compared to the other ones? Anyone?
Aside from the $28.
Well, it could be. That one is low. I mean, it's a very low amount that it's possible that they've missed something.
Oh, but you know what? No, six. I'll say because it's even 20,000.
Yep, that is the one. One of the odd things about fraud, oftentimes they do it in nice big round numbers. 20,000, 5,000, 10,000. You usually don't find that in general, generally you're doing business. And you go to the grocery store or something like that, you know that it's very odd, how often does your bill come out to exactly $30? It doesn't usually happen. $30, $31.22. Okay, that happens a lot. It's very strange to have it come out exactly nice round numbers. So a lot of times, if you do see fraud, or if people do fraud, a lot of times they'll do it in nice big round numbers, and it is kind of an odd thing, but a lot of times when you see those, it could be fraud. It could also be like they're just transferring money or something, but at the same time, this could be. Okay, so what do we do with this? Well, what we might do is what they call stratifying the sample. So it might look like this. Items over, say, $10,000. We take 100% of them. Oops. I would say sample here. This really 100% really wouldn't be a sample. It would be the actual, but you get the idea. Might need to move this over a little. Okay. Items between, say, 1,000 and 10,000. Maybe not 100%, but maybe, I don't know, I'm making this number up, 20%. So we would take a random sample of those. Where's my percentage? There it is. And then, the other ones say items under $1,000. I don't know, 4%. Yeah, I just kind of made that up. But this would be a stratification of a sample. You're oops, anything over $10,000, you want to take all of those, take a look at them. If they're down here, between 1,000 and 10,000, maybe 20% of those are still fairly interesting. But they are also not to the level of that you have to look at it. And then items under 1,000, 4% of those. Now, you're less interested in those because even if those are, um, you know, fictitious or over or understated 100% or whatever, it's not going to make too much of a difference. But you still want to be able to every item in this, every item should be able to have the chance of being picked. It may be less, but it could, it should be, every item should have the possibility of being picked, and it will be. Those things that are smaller will have lesser. And quite honestly, this is monetary unit sampling. This is what kind of monetary unit sampling does automatically. It automatically adjusts for these things. But for classical sampling, we may have to do a stratification of a sample. This would actually not be a sample. You just take all of them, whatever they're off by, they're off by. But these you'd have projected values for them. This one would be actual value. So that's a stratification of a sample. Okay. And we'll do these types of sampling, and I think we'll probably stop there. All right. Types of statistical sampling plans. Sampling for attributes. So sampling for attributes. These are yes/no tests. We usually use these for sampling of internal controls. So for instance, let's say that was the purchase order signed? I'll put this on a different level. And it'll be yes or no. It was either signed or it wasn't. Oops. So sampling for attributes. Is the attribute there? Is there a signature there? Yes or no? And this will tell you, how much you can rely on the internal controls. Basically answering the question, can the controls be relied upon? And you'll have some error rate, usually is 2% okay or is 5% or whatever it is. So sampling for attributes, we didn't actually do that. Not yet anyways. We're not going to do it actually. We're not going to do an actual sampling of, no, well, we're actually going to do the results. We're going to look at the results of that later on here. So sampling for attributes. These are yes, no tests. These are binomial. If you're into the statistics, but we usually use the estimation of it here. E. Oh, I want to do that. Change my microphone. Okay, hopefully my mic's back. All right. Did we already talk about this? I don't think we did. Dracula cam. We generally use the normal distribution to determine this. Let me. That's not what we want. No, anyways. All right. So sampling for attributes. There are two T's in it. These are basically going to be yes, no's. Is one or the other. Is it signed or isn't it? And this is sort of like a coin flip. And we have a thing called the central limit theorem. You guys probably had this already. Oops. Central limit theorem. And that is basically everything will turn into repeated distributions will turn into the normal distribution. And it works for almost all of them. So whatever the distribution is, if you do it enough times, it'll end up, even if the distribution looks like, this, if you do enough of them, it'll equal that. So whatever the distributions are, no matter how crazy they are, if you do them enough times, they become this. And that's the same thing that we do here. And you say, okay, well, that's interesting, but why do we care? Well, we care about it because it makes it a whole lot easier than actually chunking through the numbers of a binomial distribution. And let's say a coin flip, one flip, the possibility of it being heads or tails, same. So you have 50% chance of this and a 50% chance of this. If you have two flips, okay, it's possible that both of the flips are heads. Flip one and flip two are heads. It's possible that they're both tails. Now, it's possible that the first one is a head, and the second one's a tail, or the first one's a tail and the second one's a head. So if you don't care about the order, and generally we don't care about the order, and for what we're doing, if you don't care about the order, notice that there are two chances of this. So what would be the odds of this? This would be 25%. This would be 25%. These two are both 25% together, they'd be 50%. Even after just one coin flip, it starts to look like the normal distribution. So this is the central limit theorem. It's actually it's a very important one because it allows us to use the normal distribution, which we have tons, it's really easy to use that distribution. So rather than chunking through all the numbers of a binomial, if you want to look at something fun, look at how you do that numerically. But if you can approximate it to the normal distribution, it's much easier. And that's exactly what we do for this in auditing. We actually put it into the normal distribution. Okay, sampling for variables. Let's go to, these are ones we already did. The variables that we're talking about here, the variables are for dollars. Yeah. Paper on my desk. So sampling for variables, what we're actually talking about are sampling for dollars. $1, $10, $50, whatever. And these are what we've already done these. Classical sampling. No, I don't know. Do I need to say anything on this? Probably not. So classical sampling would be for dollar amounts. We've already done this. And same with monetary unit sampling. Now I want to kind of distinguish between these for just a second. Sampling for attributes, these are binomials, these are yes/no tests. These are not dollars. Oops, spell it correctly. So these are not for dollars. Okay, so so if the purchase order wasn't signed, how many dollars does that mean it was off by? You don't know. They may not be off by any dollars. It's possible, for sampling attributes, that's not me. Oh, that's not me either. Okay, so it's Dracula light. It's possible that even though the purchase order wasn't signed, that there's not any problem with it. So here's the weird thing about sampling for attributes for testing the controls. You're just going to see if you can rely on the controls. You're not going to actually find material misstatements. You only find material misstatements with sampling for variables, which are, these two. These are what's going to Nope, wrong color. Turquoise. These are the ones that are going to tell you if there are material misstatements. Classical sampling monetary unit, the ones that we already did. Sampling for attributes will not tell you if there's a material misstatement. It simply tells you whether you can rely on the controls. Are the controls working? Are they actually following the controls? All that kind of stuff. So this is the question it's answering for. Oops. Sampling for attributes. Can the controls be relied upon? It is not saying whether they are materially misstated. And even if the controls are not being followed, it's possible that there are no material misstatements. Okay, so they didn't sign the purchase order. They were supposed to. The rules require they do it. Their controls are lacking, but it's possible that there is no material misstatement if the financial statements are not materially misstated. The purchase orders were filled. They weren't materially misfilled or anything like that. So even though sampling for attributes, can we rely on the controls? Now you say, okay, well, why are we testing for the controls? First thing is you don't have to. If you want to rely 100% on classical sampling or monetary unit sampling, you can to find whether it's materially misstated. However, oftentimes you want to rely on the controls because it'll reduce the testing. It'll reduce the testing that you need to do if you can rely on the controls. So you may find, maybe they have 10 controls. Maybe you can find you can rely on 9 of them. There's one you can't. That's the one you're going to look at when you do your testing of material misstatements and classical sampling and monetary unit sampling. Hey, is there this thing that they have weak controls on? How are the financials when it comes to those? You're going to look at those more intently because that's where there could be a problem. So if you can rely on 9 of the controls, those areas are probably you can test them much less. If there's a problem with the controls, then you're going to test them more. So purchase order, there's a problem with purchasing, you're going to test that more. If they're not signing the purchase order. If all the purchase orders are signed and everything else is okay, you probably don't have to worry about purchases too much. So testing of controls is done. It kind of points in the direction that you may want to do more of your what they call substantive testing, testing for variables. And it helps you to focus on one of those. I mean, it also tells you a little about what the controls of the room for the company. Now, large companies, publicly traded companies, you have to rely on their controls. So you have to do testing of the controls. If you're auditing Walmart, when it comes to their purchasing, you have to rely on their controls. You have to do the testing of the controls because you can't take 100% sample of those or even close to it. You have to know what you're looking for, and testing of controls is the only way to find out where the problems might be. So even though technically they're not required, technically you could just you say, okay, I'm not going to worry about the controls. I'm just going to jump right down here and do sampling. That's fine, as long as you can get the number that you need. For some large companies, this is kind of impossible to do. You have to go look at the controls to know what to actually look for. But it is possible that you don't do any of this sampling for attributes. It could also be, let's say that you only have 10 customers or something like that. Well, don't worry about the controls for those 10 customers. Just look at all those 10 contracts or whatever and, be done with it. Okay, last thing we'll cover. Did I do this right? This is something that gets tested more than it really should. Dual purpose testing. Okay. Let's see. How do we explain this? oftentimes the sampling for attributes is a much smaller number than the sampling for variables. These are the yes/no tests. And these are the dollar tests. Oops. And oftentimes, can I move these over? Yeah, I can. Okay. So oftentimes, if you're doing both of these, you can do your sampling for attributes. You're going to do this one first because it'll tell you where the problems are. And you're going to take 100 items. And you don't need any additional items. Oops. Now coming down here for sampling for variables. Okay, you got to pick a sample. Notice that you've already got 100 items here. You can reuse those same items when you're doing your sampling for variables. Whoa, what did I do there? Let's try that again. There we go. Okay, so you already have 100 of them. How many more do you need to pick? So you're sampling for attributes. You picked, make those yellow. You picked 100 items. Rather than picking a new, you're gonna still use those same 100 items. So how many additional items are you gonna pick? Anyone? I'll give it to you. 400. You already have 100 of them. So these will be the dual purpose ones. 100 of these will be dual purpose. You'll use them for more than one test. So a total of 500 items, 100 of them can be, oops, can be dual purpose. Oh, wait, do I want that? Yeah. And I'll leave it like that. Okay, so the reason I say they have this a lot on the CPA exam for sort of at least they show it in the reviews a lot. It really is just something a little bit more efficient. You could pick 100, you could pick 500 new ones, and there wouldn't be any problem with that. It's just less efficient. So dual purpose testing is when it's used for dual purpose, and that is both for attributes and variables. And again, it really doesn't. There's no theoretical advantage to it, but it's efficiency. All right, let's stop there. Oops. Hey. Okay, I think there's a test you guys need to turn in, isn't there? A test due 17th. I know some of you already have it in, I believe. Okay, so we're not going to turn in any of these. Shoot. Okay. Well, next week we'll definitely finish up chapter 5, and I'll send out the exam next week for chapter 5 evidence, and that's a huge one too. On the CPA exam, they really hit evidence hard. Chapter 3, the independence issues, those get hit hard. The evidence ones are probably another. So the independent ones are probably somewhere around 15%-ish of the exam, and probably another 15% is going to be evidence. So, those two chapters are about a third of the exam. It's quite a bit. If you can, there's a lot in there, but it's quite a bit of stuff. Any questions? No, I'm gonna give you guys extra credit points. Let me get a screenshot. Hey, did you load or not? You did. Okay. No, I don't want that. Okay. Um, week 8. Okay. I'll see you guys next week.